Japan's economy grew 4.1% year over year in the first quarter as domestic demand and government spending helped fuel the recovery. Pinterest raised $100 million of financing, valuing the startup at $1.5 billion. I'm Taylor Schrantz, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with theStreet, and together we bring you the Morning Call Express. Stock futures are trading flat, but more news out of Europe continues to weigh on the market. The latest is that the ECB stopped lending to some banks out of Greece.
I think people were expecting that type of news, and they were kind of hoping for it yesterday. You had some news from Merkel saying that she hopes, or they're committed to Greece staying in the Eurozone. They've been talking with a little rhetoric that they want to be unified. But I think traders really feel that there's no way that it could happen. It's just a matter of time that Greece leaves. It's just a matter of time for contagion to spread. So I don't think anyone's falling for the old rhetoric, and people are saying, you know what? Greece already had their orderly default. Let's make this one a real default. Rip that Band-Aid off. I know it hurts, but typically it leads to a better situation moving forward.
You know, we also heard out of Spain that their GDP contracted, yields there continue to go up. There's definitely a contagion effect here. But how deep has the correction we've seen so far been enough?
I think people want to see if the contagion would spread, and it's spreading. You see it in Spain. You see that their debt offering wasn't horrendous, but it was definitely soft. And also in our U.S. companies, you're seeing some softer earnings come out. We saw it with Cisco. People tried to give it a pass or say, oh, it's a Cisco effect. But meanwhile, it is growth slowing in Europe. It is, coming into our company's earnings. You saw it also with Staples. So there is an effect. So the question is, if you look at the chart of the S&P, where is a buyable dip? Does it get more extreme? And if you recall, obviously I always follow the trend lines, and this was your first sell signal when we broke this trend line from last October. Then you had your lower high, and then this head and shoulders pattern that I talk about technically, where we triggered below 1360. We're getting close to some macro support here. So I know for myself, I'm not short. I'm looking to have a buyable trade here, but every day we've tried that, it's failed. So what you want to do is you want to see a little speed, you want to see a little momentum. So if we could break below yesterday's low of 1324 and cascade down this morning, it might create a better setup or a better reversal for what can give us an afternoon rally to give us a positive environment for Facebook tomorrow.
Speaking of Facebook, why don't we take a look at some of the leading sectors, including tech?
All right, well, tech has been somewhat of I would say, a pressure zone. It usually leads, and lately it's been lagging. If you look at the chart of the Qs, nothing really great to show here. It did break below the 100-day moving average. It did close in the lows yesterday. You saw a lot of high beta names pressured as well. It's coming into some support, so it's hard to be short tech here. But again, if you try and buy it, it's not working. So I would say this 62 zone would be the next area that I will watch to be a buyer of. And also, if you see some type of reversal strategy, use 62.81 as that type of strategy where it trades through, goes lower, comes back above, and that could relieve some pressure.
What about retail? We're in the midst of earnings there, but we've seen some pressure on some of the higher multiple names like Lululemon and Under Armour.
Yeah, a lot of those look vulnerable to a breakdown. If you look real quickly at Lulu, you have to have high-level stops. LU right now is at that area. I think some guys in my office have been trying to short it. We're coming into a big level here. If this breaks 70, you could see a move at least to 67.51 or even down to 65. So even though stocks provide leadership in corrections, I think 4 to 5 stocks go down. So with this little breakout failure, it's holding support, and I think you just have to be careful and know your time frame.
We got to talk about the financials. JP Morgan's been in the news all week long. They're talking now that the loss is not $2 billion, but $3 billion.
I know within 4 trading days, it just went from $2 billion to perhaps $3 billion. That's why JP Morgan and the banks closed in their lows yesterday. And if you look at JP Morgan, you look at the reactionary low from the news, that was right here. Okay, so yesterday technically it was a bad sign when it couldn't hold it. When it broke this area, okay, that was just sign saying, you know what, this dip might not be enough. So to me, closing on the lows, it's opening lower. My next big support on JP Morgan, where I'm going to try to be a buyer, comes all the way in here at around 34.
And then, Facebook is the news story of the day. We're going to price that IPO tonight, and we're definitely going to talk about that in the long version morning call.
Yeah, so they'll tune in then. We'll give you the nuts and bolts on how to trade it and what effect it might have on the market. So tune in then.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. With T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.